It's Diwali. Good afternoon. Welcome to Midcap Radar live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. Markets in the cheerful mode. We are at the 25,890 mark. We actually crossed the 25,900 mark as well. But you know what is happening is some retracement from the top, but there's nothing really to complain. Markets are cheerful. We have a lot of action coming in from the banks. Reliance Industries is doing really well. And the mid-cap index has surged as well. Almost a 1% gain is what we are seeing there. But there's so much to catch up on. So let's start the show with the top headlines. Heavyweight lift indices as strong earnings and rising foreign interest in India's banking sector ring in some cheer. Pharma and IT are big gainers. Mid-cap surge.
Emirates NDB is set to buy 60% in RBL Bank for rupees 26,850 crore in the largest ever foreign direct investment in the Indian banking sector. The Dubai-based Middle Eastern Bank's fund infusion is seen as a big growth boost for RBL.
A whole host of banking stocks are also in focus. PNB, DCB, IDFC First Bank surge after reporting their Q2 numbers.
Tejas Networks under pressure after reporting third loss-making quarter in a row, reports a net loss of 307 crore rupees, largely due to lower revenue and provisions due to a manufacturing process loss.
Dixon Tech is under pressure after its Q2 numbers. Revenue, margins and profit after tax in line. Mobile volume growth misses street expectations. Management tells CNBC TV18 that their margin can expand by additional 50 to 60 basis points going forward. They have also cut their margin guidance going forward, growth guidance going forward. All right, those are the top headlines that we are tracking today. A lot of stocks which are on our radar on the back of earnings and a lot more. CEAT, for instance, is up 9.5% as we speak. GMM Pfaudler up another 8%. In terms of sectoral movers, of course, it's the PSU banking index that's doing really well, 3.3% higher there. Oil and gas, infra, IT, all of them are the big movers in trade. Of course, we have the Muhurat trading tomorrow and then there's a holiday. But, you know, earnings, they continue to trickle in and they are the big talking point.
That's right. Good afternoon, Sonal. You're absolutely right. Now, like you mentioned, earnings, Reliance over the weekend, extremely strong set of numbers, and all of the banking names too, very, very strong. So, you know, the large caps have actually been quite strong. What's actually doing quite well is the mid-cap private banking. So look at names like RBL Bank, Bandhan Bank, Federal Bank. Remember, even Federal Bank has a board meet where you actually have a fundraising proposal on the anvil. So that particular stock too will be in focus. That stock higher by 8% is going to be interesting to see what is the quantum of the fundraise and whether, you know, the company said it's going to be via the preferential route. So who exactly is the buyer over there? Along with that, the entire PSU banking space is doing quite well. So look at names like Indian Bank, that particular stock doing quite well. Bank of Maharashtra, all of the names, you know, Bank of India after a strong set of results doing quite well. But we have Hormaz standing by the wall to take us through all of the movers from the mid-cap end of the side that are making the moves today. Good afternoon, Hormaz.
Good afternoon. And of course, there is only one talking point today, right? It's been banks, and it's banks all the way. Be it bigger banks, be it smaller banks. But take a look at South Indian Bank, for instance. The numbers came out last week, weren't the most appealing. We spoke to the management. The stock is up 17%. Now, DCB Bank, after some very strong results, is up 13%. RBL Bank, of course, after the news. And in light of all of this, CSB Bank too has seen a move towards the highest point of the day, 7.5% higher on this stock as well. Now, there are some not so positive earnings reactions as well is what we are witnessing in today's session. It's not just all positive. There are names like Tejas Networks, there are names like UTI AMC. But before we get to that, you take a look at the other theme that's buzzing today, and that is tires. And look at CEAT after its results. And in light of CEAT's results, JK Tires and Apollo Tires too are seeing gains of anywhere between 5 to 7%. We spoke of negative earnings reactions. UTI AMC has recovered from the lows of the day. At one point was down 10%, so there is a significant recovery from the lows. What has not seen a recovery is Tejas Networks. It's still down 8.5%, and Avantel at one point was down around 12-13%. That stock too still down around 10%. The stocks that are doing well on the back of strong volumes in today's session can't not have a financial name here as well. Canfin Homes among the volume-led movers. Radico Khaitan and a lot of the other Alcobev companies also doing well today. And Rajratan Wires is now up 13% on very very, very strong volumes. And among the last on the list today, stocks that are at a 52-week high, no prizes for guessing. They are financial names. You look at AU Small Finance Bank, that's at a record high. Bank of India is at the highest point of the day. PNB, we just heard from the management a couple of hours ago. And Karur Vysya Bank, all of them seeing gains of anywhere between 5 to 10%, all of them at 52-week highs today.
Oh, yes, some interesting names there. Thank you so much, Hormus, for joining us and giving us that list. Well, it's a good time to get a technical check on the markets. Ruchit Jain from Motilal Oswal Financial Services is joining us for just that. Ruchit, good afternoon. Happy Diwali to you. What are some of the levels that we should be watching out for on the Nifty? Any individual names that you are tracking as well?
Yeah, very good afternoon. Wish you and your entire team and all the viewers a very happy Diwali. Well, as far as markets are concerned, there is no doubt. The overall trend remains positive. We have already, seen an all-time high levels on the banking front, and the banking space is continuing that momentum. So even on the Nifty, we can see that a pullback move from the IT, which were the laggards, the IT heavyweights, Reliance Industries. So there's a cross buying momentum seen in index heavyweights, and when index heavyweights move higher, of course, we can expect a good move on the Nifty as well. So on the Nifty, we are eyeing the 26,000 level where the call writers positions are placed, and if the market manages to surpass that 26,000 mark in this week itself, then I think we should head towards 26,400 mark very soon. So overall trend remains positive, although we can see that on a momentum basis, the small caps are still showing that relative underperformance in this up move. So we are also advising to focus more on large caps or large mid cap names where the trend seems to be gaining momentum. So a couple of recommendations on the long side. One is the TCS amongst the heavyweights, where signs of trend reversal are there post the recently announced quarterly numbers. The stock is on the verge of a breakout from a falling wedge pattern. Positive RSI divergences are there, which are usually seen at the end of a downtrend. So if not an uptrend, then at least we believe that price-wise worst phase is over for the stock. So short-term traders can go long for a pullback with stop below 29.40 for potential targets around 31.60. And definitely you cannot miss the momentum in the PSU banking space. So PNB is our pick within the PSU banks, where we expect a good momentum based on the recent price volume action. So traders can go long on PNB as well with stop loss below 114 for potential near-term targets around 127.
Richard, thank you so much for joining us, giving us a view on the markets, and clearly the momentum as far as the PSU banking index is something that you're alluding to. Well, we'll now slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned. Welcome back to Mid-Cap Radar. Well, one stock that's doing very well today is Federal Bank. Earlier today, we spoke to the management, but Federal Bank refused to divulge any possible interest from prominent private equity investors in the lender, but it has lined up a board meet to consider raising funds on October 24th. Let's listen to a slice of that conversation.
In our case, we have given a notice of our board meeting on Friday, and we will update you once the board meeting is over.
Can I just, if I can, without of course divulging details and not wanting you to say anything which is against regulations or anything, but is this a minority transaction? The name which is of course being talked about is Blackstone picking up a 10% kind of a stake in the bank. Would I be, without you going into specific, in the ballpark, be correct?
Prashant, as I said, the board will be meeting on Friday to consider this agenda item as we have put up in the exchange. And please let us time till Friday, and after the meeting, whatever is the outcome, we'll give you an update.
But sir, can you, we understand you can't take any specific names, but I believe the bank is already well capitalized. Can you just update us on the latest capital adequacy levels? And also, why are you looking to raise capital? Is this just an enabling resolution? Or are you looking to, maybe expand in certain businesses, wealth, etc.? I mean, why the need to look at capital at all right now?
Like I said, I'll just repeat, just bear with us till Friday. Once the board meeting is over, then we definitely come out and give you an update on the outcome of the meeting.
This is a minority transaction, right? That much you can tell us.
I don't even know what transaction you're referring to. All that I know is the board is meeting on Friday on the agenda, which we have put up a notice on. And we will, as I said, we will definitely come back and give an update on the outcome of the board meeting.
All right. So in the past, you have said that wealth management is something that you'll like to look at. Possibly that you're looking at some inorganic growth in this direction?
On wealth management, Nigel, as you know, we have recruited a head of wealth management who joined us earlier this financial year. And we are building out our platform for launch of the organic offering of wealth to our customers, which is on track. And in Q3, next quarter, or rather this quarter as we speak, we will have the rollout of the wealth offering to our customers. So that is on track. And, we do, of course, want to grow as part of our strategic objective, which we had outlined in the analyst meet. Wealth is a focus area and the organic rollout is on the cards.
And what about inorganic growth, sir?
Nothing on the table at this stage, Nigel.
So the money that you're raising could probably be used for some other inorganic growth?
I don't want to comment on this aspect. As I said, let's wait till Friday and then we can talk more on.
But it's not just an enabling resolution. The intent is to go ahead and raise money, right?
The board will consider all options and we'll have to respect the wisdom of the board.
All right, that's about Federal Bank, but banks, they definitely are in focus today. RBL Bank is one of them. Emirates NBD is set to buy 60% stake in the bank for 26,850 crore rupees in the largest ever foreign direct investment in the Indian banking sector. In fact, we spoke to the management of the company on this deal. Listen into what they had to say.
I feel that with the current trending and the core value which we are likely to create with this deal, I don't think that the people will be looking at responding to the open offer because it is going to be something which co-creation of the value. And this huge investment which is coming into the bank will also improve the book value also. When the book value moves up, this is something which is going to add up to your market value. Market cap will go up. So taking all these considerations, I feel, it's open offer may not kick in much of the numbers, and it is hovering around 60 plus the branch merger, whatever the percentage is going to come. Immediately, it is going to be the RBL to start with, and we have to wait for the things to evolve rather than taking a preemptive thought in that. Today, my capital adequacy is CRAR is around 15%. 15. For the discussion purpose of understanding, but let us hold it there. Right? In the expanded capital of 42,000, I am going to maintain that as a set aside for the purpose of regulatory capital. So somewhere around 6,000 crores or something like will be set aside. So the remaining around 35,000 crores is something is going to be available for us to expand the business, taking some investment part of it and other things, and a conservative of around 8 times because some of the will go for distribution investment and things like that, technology upgradation and things like that. Leaving those aside, possibly the very rough calculation will make us 8 times if I do it, and it has an ability to grow the asset to the tune of around 2.5 lakh crores. This is something which is a big opportunity. This is not a one-year story, it's a 3 to 5 year story, what we have been thinking among ourselves. However, the deeper calculations are required to be done and will work much better. I strongly believe this is going to get our credit rating revised. We are now AA minus, and naturally this synergy is going to be you are strongly capitalized, your future growth is assured, and you have bigger opportunity to make the better things, and there will be positive rating upgrade for the bank is concerned. There is every possibility. See, today our ROA we are intend to reach around 1% exit ROA with the current setup. So when you are going to get such a huge influx of the fund, the capital, which is interest-free, that is automatically going to kick up my ROA maybe around 0.5%, 0.7%, depending on exact calculation we have to do that. So my ROA by design will go up because of this capital infusion. The next 2 to 3 years, with an accelerated growth, what we are looking at, an accelerated path we are looking at, then it will be in a position to come back to its double digit maybe in another 2 to 3 years' time.
Well, RBL Bank higher by over 8% despite the sharp rally that we've seen over the last 2 months in this particular name. But we'll now slip into a short break. We'll get you more on the markets and we focus on Dixon Technologies and Tejas Networks. Stay tuned.
Welcome back. It's a lot about banking names. It's a lot about oil and gas names as well in the broader markets. Also tire names. So something like a JK Tire is higher by 7% in trade as we speak. I spoke about Federal Bank earlier. The other name that is on our radar is AU Small Finance Bank. DCB Bank is up another 13%. You do have MRPL, which is surging in trade. It is up around 7%. It had reported numbers already. They were a good set of numbers. The stock did well that day. And again, there's some addition to those levels. It has surged to the day's high. And remember, oil to chemical segment of Reliance Industries did well. The refining segment was strong. And that is something which is rubbing off on the other names as well. We do have something like an Edelweiss Financial, which is up 6% as we speak. Central Bank of India is up 5.5%. So those are some names which are in focus today. Dixon Tech is one stock which is under pressure after its Q2 earnings. Upasana is joining us to tell us what the numbers look like and what are brokerages making of this set this time around. Upasana.
Well, one of the most important thing is the management joined us today after its Q2 results, and the management has cut its revenue growth guidance for FY26 from 40 to 45% to 30 to 35%. If we look at the numbers on overall basis, Q2 was largely in line with the street expectations, with revenue, EBITDA, PAT, all three being in line. Now, companies mobile and EMS, which is the key segment, has reported a strong growth of 41% on year-on-year basis, while consumer electronics and home appliances segment have seen a weak performance this time around. This is mainly due to deferred demand on GST rate cuts, is what the company has indicated. Now, coming to the volumes, that is the smartphone volumes, they stood at 8% versus the guidance given by the company, that is a sequential 15% growth. So there's a miss on this front as well. Now, looking at the long-term guidance, company is guiding for a revenue of 1 lakh crore and EBITDA margins of up to 4.5% in next couple of years. Now, let us look at what the brokerages are saying. Now, CLSA has downgraded to outperform call, and the target price has been cut to 18,800 per share. It feels that the PLI scheme discontinuation may pressure the margins of the company in FY27. Nomura has given a buy rating with a target price of 21,152 per share. It says it has cut its revenue estimates for FY26 to FY28, but margin estimates are largely intact. Nuvama has given a hold call with a target price of 16,600 per share. It says that the volume growth guidance has been trimmed slightly by the brokerage, but margin pressure is likely possible in FY27. And from medium to long term, it believes that the growth is intact for the company. Phillip Capital has given a sell rating with a target price of 9,085 per share. It says that the FY27 mobile phone volume guidance cut by 10% and margin pressure is expected in H1 FY27. So certainly this is a mixed set of views on Dixon Technologies, even after reporting a steady Q2, but a revenue growth guidance for FY26.
Thank you so much, Upasana. So revenue growth guidance cut from Dixon Technologies for the rest of FY26. Well, moving on, Tejas Network falls in trade after reporting a disappointing set of Q2 numbers. Rima joins in with more details.
Yeah, indeed, Tejas Networks, it's a disappointing quarter. The company's reported a loss for the third consecutive quarter. The company's EBITDA has also come in down at a loss of about 300 crore. The bottom line loss has expanded. In Q1, the loss was about 200 crore. This is further expanded to 300 crore. The company says it's on account of lower revenues, but also there was a 190 crore hit on account of provisions made on account of manufacturing process losses, warranty, and inventory obsolescence. Even the top line of the company, if you look at it, in the first half of the year, the revenue growth has been 200 crore in Q1, now 260 crore, and that is sharply lower compared to FY25, where revenue growth was closer to 2,000, 3,000 crore. The company says delay in receipt of the BSNL 4G add-on purchase order resulted in a shipment loss. So the company has reported disappointing set of numbers. The stock is down 7% today and 54% lower in the last 1 year.
Yes, a big cut there. Thank you so much, Rima, for explaining what went wrong with Tejas Networks in the quarter gone by and the performance so far as well. And as we celebrate Samvat 2082, market veteran Madhukela shares his outlook on the Indian market and the surging gold prices. Listen in as we wrap on Midcap Radar. Stay tuned. Your stocks will come back when we return.
Traditionally, I've been more positive, always been in equity. And that fundamental view has not changed. you can tactically use gold and silver as an asset allocation call. But I don't think someone like me can invest heavily and significant portion of my portfolio in gold and silver for a long run. Yeah. And my premise is based on very fundamental things. That all the noise about this gold and silver price is all technical in nature. There's nothing fundamental about it, right? There's no real fundamental usage of gold or silver which can justify these prices. We are all talking these central banks are buying, dollar is debasing, and I agree with Manisha's point. But when I buy good companies, their earning could go up. Like if I buy really good companies, their earning could double in 4 years, quadruple in 8 years. So effectively, I'm buying those companies much, much cheaper 8 years down the line. The same is not true for gold and silver.